Welcome to Get Rich Education. I'm your host, Keith Weinhold. When you think about where the people are moving and what makes a good real estate investment market, Texas and Florida have long come to mind. There is a place between those two areas that offers exceptional promise to investors with high rents, low taxes, and a low cost of living that new residents find attractive. It's also the revealing of a new GRE city today on Get Rich Education. You know, a lot of investors choose either cash flow or home price appreciation, but one real estate market could provide both: Jacksonville, Florida. They've got 27% lower home prices and higher rents than the national median. Their market has appreciated 34% more than other comparable cash flow markets over the last 30 years. Get positive cash flow today and above average appreciation for tomorrow. They often have available inventory in Jacksonville, if you can believe that. Start at cashflowandgrowth.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE. From Naples, Italy to Naples, Florida, and across 188 nations worldwide. You're listening to one of the longest running and most listened to shows on real estate investing, economics, and wealth mindset. I'm your host, Keith Weinhold. With the ending of the CDC's eviction ban last month, and then it got extended again, the Wall Street Journal was reporting on how tenants in the United States Midwest and South are the most vulnerable. Because in places like New York and California, they extend the eviction ban. That really doesn't happen so much in the Midwest and South. They're landlord-friendly. They're the places that we focus on. And no one could have expected a pandemic. But when you're strategic and you take a top-down approach to real estate investing, and you do think beyond only your home state or your home nation where you live, you see now why we stick to investor advantage markets where the laws tilt in your favor, not just the numbers. From day one, there is a specific reason that we focus on those parts of the nation, and we've also selected residential over commercial, and then also places that tend to be generally more suburban in character. And gosh, you have really been the beneficiary of this, because Redfin recently reported that home prices in car-dependent areas have risen twice as fast as those in mass transit-accessible areas. Now, it's the proliferation of autonomous vehicles that I thought would have been more extensive by now to tilt toward the suburbs being a great place to invest. Well, little did I know years ago that it would be a global health crisis, but it still happened. In fact, since January of last year, so just over a year and a half, nationwide, the median home price in car-dependent areas, which correlates with the suburbs and rural areas, has grown an astounding 33%. Yeah, 33% in just over a year and a half. By comparison, in mass transit areas, which correlate with urban cores, those areas saw a home price growth of just 16% over the same period. So it's another interesting way to parse the areas that have grown in price. Redfin's chief economist has gone on to say that low cost of living states have become the go-to destination for employees, where their company lets them live anywhere as long as they have an internet connection and all those other reasons that I've already discussed before. Last week, I talked about how it's completely plausible that GRE turnkey investors achieved a 95% total rate of return year over year from all 5 of your profit centers. You heard me right with that 95%. Now, that rate is surely not sustainable at that level for that long, but it's time to celebrate, even if you do it in a humble way.
You're talking to the Rolex wearing, diamond ring wearing, kiss stealing, woo, wheeling dealing, limousine riding, jet flying, son of a gun.
Of course, that is pro wrestling legend Ric Flair, and those ridiculous interviews that he did, gosh, it must be from the late 1980s or so. We're more humble than that around here, but yeah, go ahead and celebrate the torrid housing price run-up, if you will. We are more into cash flow around here, but yeah, the handsome appreciation really is quite amazing. And very few economists see any sort of housing price crash coming, largely due to housing's increased utility, heightened scarcity, and greater demand. Like I've told you elsewhere, the housing crash has already occurred. It was a housing supply crash because the supply of available homes has fallen so far. Next week, be sure to join me as the greatest selling financial author of all time, Robert Kiyosaki, returns with me once again. He's the author of a book that I bet you've read, Rich Dad, Poor Dad. We're going to discuss the 50th anniversary of the fiat dollar, which is actually coming up this coming Sunday. It's been a little while since we focused on some specific geographic markets here, such that you may be wondering, where do I actually get a property that can have all 5 profit centers like this? Properties that make you want to rave ostentatiously like Ric Flair. Well, that's what we're going to do today. We'll review what exactly makes a good investment market, and this provider offers both single-family rentals and duplexes. We're also going to learn some great ways on how to identify a thriving market. I'd like to welcome in a top income property provider in Alabama. Lindsay Davis and Maureen McCann work together, and they've been helping GRE followers obtain investment property in their investor-advantaged Alabama markets for about 6 years now. Lindsay and Maureen, welcome onto the show.
Thank you.
Thank you so much. Thanks, Keith.
Lindsay and Maureen, they're in Alabama and a new market just outside Alabama that we'll talk about later. You've really been the beneficiaries of in-migration. You are in a part of the nation where people find an increasingly desirable place to live, work, and play. So tell us more about the trends you've seen with the net in-migration to that region.
We've definitely seen a lot of in-net migration. We've got people that are looking to, well, think about it. In the new COVID world, space is more of a commodity. People are wanting to have more elbow room. They're wanting to have their own little piece of dirt with space all around them. So we happen to be in markets that offer that little gem of a thing that they're looking for right now. So we have markets that cater to very specific needs for relocators, I guess, if you want to call it. There's better employment opportunities, educational access. You've got housing affordability, which is a big one. I've seen many, many people selling everything that they've got, capitalizing on the equity, the capital appreciation in their markets. And man, they are buying acres and acres of land in Tennessee and some other places in the Southeast. I'm seeing that personally with some friends. People are tired of kind of competing for crowded space that has already been settled. And then I think everyone knows that they're looking for better quality of life, which means paying lower taxes. And we just happen to be in places where our tax rate is below 1%. So that's very attractive to a lot of these influx of people.
We're very excited about Alabama being at the top of the charts and in some regards. So we're really excited to see Alabama finally get a lot of attention. We do know that post-COVID has allowed remote working. So a location of where your job is not necessarily the largest predictor of where you can live. And I think that's been another reason why we've seen just such an influx of people to the Southeast in general.
And you cater to investors with single-family homes. Oftentimes, they tend to be in more suburban areas than they do urban areas. You've been the beneficiaries of that in this COVID world that we're in. And in fact, your entire region has seen net in-migration continue through the crisis, just like they have previously. So tell us more about that net in-migration to your region, especially Alabama.
I think you may have mentioned this on one of your shows before, Keith, that the 2020 net immigration trend from the U-Haul group of all people, they were actually showing that, if you look at the 50 states, right, the top 5 where the majority of people are moving to, Tennessee is the number 1 position that knocked off Texas and Florida from that top seed spot, which is a big deal since they were ranked. Tennessee was ranked 5th just a short time ago. Now they have jumped up in 1 year to first. What does that tell us? And by the way, Alabama was ranked 22nd. So you just have these people that are living in, they've got nice amenities, nice things in urban settings, but they can get those same types of amenities in lower cost, lower property tax states and cities like the ones we cater to. So when I saw that data, I was super excited to see that Tennessee and Alabama were in the top spots.
There just seems to be more awareness and more of a wherewithal inside the public that you can live in a low-cost place that has more favorable weather. And with what happened with the crisis starting a year and a half ago, maybe you can still keep your job and not have to pay rent in Manhattan or Brooklyn or California. So now you can change residences without changing jobs.
Yeah, that's huge. And, Harvard University did a study that stated about 40 million Americans moved starting 5 years ago. So this is all pre-COVID. So this is a trend that millennials were doing before the pandemic. And of course, obviously the pandemic heightened it, but this was something we were already seeing, was the frustration of just the higher cost of living, et cetera, all of the things that we've already discussed. And it was 42% of the 40 million were all housing affordability as their reason for moving. So this is a huge driver of where people are going.
That's a great point. Yeah, it's not mere coincidence. It's specifically for that change in the cost of living and upgrade in lifestyle that people are moving. You've operated principally in Birmingham, Alabama, Huntsville, Alabama, and now a third market just across the border that we'll talk about shortly. But with what's happened with this substantial run-up in capital price appreciation, oftentimes there in Alabama, you're experiencing a phenomenon that the rest of the nation isn't when it comes to those rates of appreciation. Tell us about that.
One of the most interesting things that we found is that historically, Alabama appreciation has not been our game. We have sold that as the cherry on top. We've got good cash flow. Our property taxes are low. You can get a really excellent rate of return for a property here in Alabama. But historically, our appreciation has been from 2 to 3% year over year. Now, what we've seen over the last 18 months is that your better areas of living, your better schools, higher property taxes within Jefferson County, which is the most populated county in the state where Birmingham is located. Historically, they always have the highest appreciation, ranging from your 6 to 8%. Over the last 18 months, we've seen the highest appreciation in all of your lower income kind of submarkets around Birmingham, which has been excellent for the investors who purchased with us back in 2015, 16, 17. They have seen upwards of 18% appreciation, which is just blown them all through the roof. And it's been great news for those particular investors. But that's one thing that we did not expect. Everybody's known that appreciation has been skyrocketing over the last year and a half. But to actually break it down and look at the individual zip codes and the sub-markets that have seen the best appreciation, it's crazy. One of the highest ones has been Center Point and Hueytown, Alabama, have seen over a 30% appreciation over the last 18 months. For those of you who know around Alabama, those are two prime turnkey areas.
Yes, and those are basically sections of the Birmingham MSA. You're talking about Hueytown and some of the others, these places deemed to be lower income that often tend to get lower rates of appreciation. But that's flipped over in the crisis that began about a year and a half ago. And you've seen some of those lower, more modest income areas appreciate greater than the high income areas.
Right. That's a trend we did not see coming.
And I will add my 2 cents as the sales gal, is that let's put things in context, right? In 2012, 2013, 2014, capital appreciation was not even something I would whisper on a call with an investor, right? Because it was so modest. It was one of those, you would kind of sell it as, well, it's the stable market. It's not as affected by the market trends. You're just going to get that slow and steady, little modest 2 to 3% capital appreciation year over year. So now it's really exciting for me because I actually have an opportunity now to chat with investors about the capital appreciation in the markets that we've been serving for the last 8 years or something in Birmingham. And now we've got Huntsville for the last 2 years, and I won't reveal the last one until we talk about Keith will allow you guys in on that little secret. But what's so fun for me now, talking on these calls every day with investors, is, man, not only are we providing still good cash flow, but now you've got a market where you've got excellent capital appreciation. And the three pillars that you need to create wealth are the capital appreciation, cash flow, and then, reducing your tax liability through earning hard assets. And when you can deliver all three, man, that's good. Delivering two, we've been able to do two for a long time, but man, to deliver that third one is like that window of opportunity that is here right now that we're experiencing it. And some of the experts that I have talked to, I was listening to Dave Steck the other day, he's kind of projecting this out to about 2024 until we start seeing some of the capital appreciation soften a bit, but we still have a deficit in inventory. We don't have enough housing. We've got about a need of 1.3 million units a year. We're still building about 1 million units a year. So there's still some upside here for us to sell not only the cash flow in our markets, but the capital appreciation too.
Everything's working out for real estate investors in the real estate industry these days, really, except for the dearth of inventory.
100% true, Keith. We just need to build faster.
Right. That's the goal, and we're trying. But right now for Jefferson County and really all of central Alabama, I think you're at 6 months inventory is what's considered a stable market. And we just dropped below 1 month of inventory here in Jefferson County. So yes, we are trying to build them as quickly as possible.
Alabama recently ranked number 1 for per capita FDI, foreign direct investment for states. As we talked about, there's a low cost of living there. For example, in Huntsville, residents spend 19% of their income on housing. Just to give you an idea of how low the cost of living is there, what attracts people to the state of Alabama. You have that high ratio of rent income to purchase price, which is really that foremost ratio in what's profitable for an investor. And as we mentioned, the property tax is so low. Expect to see property tax 75% lower than the national average.
Less money going out means more cash flow in your pocket. Those are the markets that we love to help investors get the rate of return cash flow and that they're looking for. We love helping investors build these long-term legacy wealth strategies.
And in regards to property taxes, like you said, 75% less than everywhere else in the country. Madison County, where Huntsville is located, your average is 0.45. And then Jefferson County, your average is 0.33% is paid in property taxes. I don't know how that's not a win.
Yeah, I think of the national average as something like about 1.25% in an annual property tax obligation as a percent of the value of property. So that's really just another reason why I know that Alabama is some national investors' favorite investor state. You're listening to Get Rich Education. We're talking with Lindsay and Maureen about investing in Alabama income property because that's specifically what they do. More when we come back. I'm your host, Keith Weinhold. Hey, is your IRA in a real estate syndication? Yikes, a 37% UBIT tax could hit you, but you still have a chance to set up your EQRP and avoid this. Did you make too much money in 2020 and need more deductions? Now federal law lets you set up an EQRP in 2021 and get deductions for last year, retroactively. Even put old IRA and 401k money in Bitcoin, gold, or your own business. Get control of all of your retirement money, tax and penalty free. Text EQRP in all capital letters to 72,000. The people that our listeners can't stop talking about are Ridge Lending Group, NMLS 42056. They've provided GRE listeners with more loans than anyone, and it's where I got my last few loans. They finance single-family income property up to 4plexes. They're the number 1 lender for beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and get your custom plan for expanding your cash-flowing portfolio. Start at ridgelendinggroup.com.
Hi, this is Russell Gray, co-host of the Real Estate Guys radio show, and you're listening to Get Rich Education with Keith Weinhold. Don't quit your daydream.
Welcome back to Get Rich Education. We're talking about investing in an investor-advantaged market in the South Central United States, specifically Alabama, and a new market that this longtime GRE provider has moved into. We're talking with Lindsay and Maureen here. We talk about the economic drivers of Alabama, specifically Birmingham and Huntsville. That's really what gives investors ballast in a market, because as long-term real estate investors, when we buy a property, in a sense, we really don't buy a property that much for today, although that matters. We buy a property such that we're going to have a reasonable expectation that 18 or 30 months from now, when that tenant vacates, there's going to be a new tenant that's able to come in there because there are sustainable economic drivers in a market. So talk to us, Maureen, about Birmingham and Huntsville's economic drivers.
Definitely. So starting with Birmingham, the Magic City, the economic drivers there really are predominantly, the first one is healthcare. We've got an aging population. We've got the largest employer in Birmingham is the University of Alabama, Birmingham. So it is not only an educational institution, it's also where you can get treatment. We have a very solid anchor employer based in Birmingham. And the last time I checked, I don't think I've ever seen a state university leave the state. So I think we're pretty good there when it comes to having some longevity there with our largest, biggest employer. So what's nice about Birmingham, in short, it's got a very, very diverse economy. It's, predominantly healthcare, but you've got shipping, trucking, warehousing, distribution, logistics, all the things that really mattered during this COVID world, right? So people need to get goods and products across state lines very quickly. And we were really less exposed overall as a city. Our industries really kind of insulated us from global effects of COVID. We're very hospitable. Birmingham is a very hospitable area. We've got great food. We've got great entertainment, but we're not a Las Vegas. Let's just put it that way. So we were less exposed. Let's just say that.
The numbers often work in these non-flashy places in the United States for investors.
We knew that going into this, right? We predicted this. We are so smart. Just kidding. Sometimes just having some good luck on our side and just being in the right market at the right time just works in your favor.
Yeah, so it's kind of these stable plotting places. For example, look at Las Vegas in the pandemic. When the tourism and the hospitality industry shut down, they were deeply affected. You make the joke about how major established universities don't often pack up and leave, which is something that we have in Birmingham. And also with the healthcare, Americans aren't needing any less healthcare, and Birmingham's a hub for that.
Exactly. So we're insulated. When you're looking for a market, you want diversity of industry, stable economy, growth, low property taxes with a solid team in place to help deliver the product that your investors are looking for. That's exactly what we deliver in the Birmingham market. So moving on to Huntsville, which is the rocket city. I think a lot of you guys have been paying attention to sort of the competition between Elon Musk and Jeff Bezos, who's going to launch the rocket first. And I think Branson got in there and beat them all. So it is the rocket city specifically because it is predominantly focused on aerospace engineering, IT, technology, manufacturing, also shipping, trucking, warehousing, distribution. Every city has insurance and financing, right? So I don't really mention those too much because it's kind of a common denominator in all markets. But what separates the Huntsville from some of the other markets? And do we have big anchor employers there that have a very low flight risk? And you do. I mean, you look at Northrop Grumman, Teledyne, Airbus. These are really big government contracts. I mean, one of the largest employers in Huntsville is the Redstone Arsenal. So government-based, government contracts, don't quite see, I shouldn't even say, is the government going to go bankrupt? I don't know, but I think they're going to be staying there for a long time.
So that's Birmingham, which is geographically near the center of Alabama. Huntsville is in the north. Your company keeps growing. You keep serving investors well, and you've grown further north.
And we're keep going north. I've done some market research here recently, and there's a lot of expansion and growth that's happened. If you just kind of look at Nashville, and Nashville is just north of Huntsville, and Nashville, we all know, has grown exponentially. The U-Haul migration report that I looked at and studied, there were 3 outliers just outside of Nashville: Cooksville, Clarksville, and Murfreesboro, that had the highest net in migration in Tennessee. So I was like, what are these places? Who are those places? But I see where they are, and they're expanding further away from Nashville and kind of creeping into some of the areas that we are now in, which I know Lindsay will be talking about that here in a brief second. But when you see all of this growth happening kind of in this triangle in the Southeast, just in the Tennessee, Alabama market, it's really exciting, encouraging. And just because we're so smart, we saw it, we predicted it, we're there now.
Yeah, I mean, obviously, we knew this the whole time. If I can, Keith, can go ahead and announce. So, yes, we are very, very excited. And thank you so much for allowing us to announce it with you guys today. But we have started a location and will now be providing full service turnkey properties right out of Chattanooga, Tennessee. So we are very, very, very excited. And I want to tell you a lot more about the market and why we chose it.
Chattanooga, Tennessee. So we're talking about southern Tennessee here, which is pretty close to the Tennessee, Alabama, and Georgia border. Chattanooga, you mentioned Nashville. Nashville really has become one of those flashy, more popular places where the numbers don't really work for investors anymore. But in Chattanooga, you do get that high ratio of rent income to purchase price. And you've always stayed attentive to the importance of having those market drivers, part of which is having a substantial population in an MSA. In Birmingham, you have an MSA population of 1.1 million, 500,000 in Huntsville, and you've kind of stuck with that, the importance of that economic balance for that investor, because Chattanooga also has an MSA population of 500,000.
That's right. Chattanooga is very, very similar to Birmingham and a lot of the key demographics that what makes a good turnkey market. So you've got your household income is right at 54. Your median property value is 160, whereas kind of in the last 18 months, that's changed. That's been a little bit more over the 200, 240 range. But we've seen that increase. The appreciation in Chattanooga has been historically right at 3.5%, very similar to Birmingham. Now, again, it's seen a good bit more over the last 18 months. I think the highest was right at 9%. And, your average rent for Chattanooga is for a 2-bedroom, 1-bath, you're at $1,100, which is more than the Birmingham area.
Yeah.
It's still right in a very affordable range that just attracts investors because you are able to generate a great cash flow. You're able to appreciate. It just has a lot of those key indicators. And I think what Maureen, what she was talking on is in regards to Nashville, it's just the location of Chattanooga. We're predicting, don't know for sure, but its location to Huntsville, Nashville, and Atlanta, we feel like is going to be a prominent place for growth. It is already known, like Birmingham, as kind of a tech startup area. There's several very, very successful tech startups in the area. You've got Bellhop, Branch Technology, Price Waiter, WorkHound, all were founded in Chattanooga, Tennessee.
So we're talking about the new market of Chattanooga, Tennessee, and their economic drivers that you do get when you have a substantial population. You mentioned the average rent income of $1,100. Are we talking about single-family homes here that you're dealing with for turnkeys, and are they new construction or are they existing?
That is for your single family home. So right now our 3-2, we're at $1,350.
Okay.
And we've got a 2-1 where the average is $1,100. Now I'm not pulling from our current inventory, and I hate doing that. I hate using the Zillow and not what we have currently under management and rented. We are holding all of our inventory, as Maureen stated earlier. We're holding all of our inventory to make sure that we have all properties rented prior to selling to investors.
True turnkey that way. It is turnkey if it's three things: if it's renovated and ready to go, if it's tenanted, and if it's ready to go under management, all from day one for that investor. So to give us a typical rent income and purchase price on one of your turnkey properties, I think that will help a prospective investor know about the profitability. Can you tell us that?
Right now, from our investment property descriptions, which is your typical pro forma, our cap rate for cash is right at 7.5. And we're looking at about a 175, 200 monthly cash flow.
Okay. So on a single family home that rents for $1,350, what would the purchase price be?
Our purchase prices are ranging right now from $160 to $220. That's a good bit higher than our Birmingham, where we see Birmingham is about $120 to $150 price points, but your property values and your rent rates are higher in Chattanooga.
Can you tell us more about the nature or the character of the properties there? Are they existing? Are they new construction?
All of the ones that we have currently in Chattanooga are all existing. And Chattanooga, like Birmingham, the majority of inventory available is from 1970 to 99. Majority of them are built in that time.
Tell us more about of the rehabs. For example, do they always get new roofs or HVACs or?
I know you've had Maureen on a good bit. I'm sure she's talked a lot about kind of our renovation staples and that our focus on your larger CapEx items, and that we do new tin roofs, HVACs, granite countertops. We don't touch carpet at all. We do luxury vinyl tile flooring, water heaters, and then of course, electrical and plumbing upgrades if needed for safety reasons. And, then new paint, everything else like that throughout. Anything that will drive down the investor's long-term maintenance, that's what we try to focus on. And so those renovations are going to be the same from market to market. So the houses that you see in Chattanooga are going to look just like the houses that we have available in Birmingham.
The other thing that we do too, Keith, is for all properties in all markets, it doesn't matter. It's a standard business practice for us. Whenever we acquire a distressed asset, we're really looking for ways to protect our investors' capital and mitigate any loss of that capital through really big, expensive maintenance bills, right? So what we do, which I think is really unique, is we hire a third-party home inspector. They come in and inspect the distressed asset. They give us their findings. We take those findings, we implement those into our repairs list, because we really want to, defer maintenance for as long as possible for that investor, really give them a good quality property up front. The other thing we do too is a lot of times these properties are on sewer lines. So we have a plumber that will inspect the line. They'll put a scope down there. We find any problems between cracks, fissures, ground pressure, roots growing through. We're going to handle that issue ahead of time because, again, our main goal is to provide the best quality rental property that we can to that investor. And the only way that we know how to do that is by getting third-party eyes on that property, inspecting it for the just in case something that we missed, so that we can protect that asset and that investor for the long term of ownership in that property. So it doesn't matter if that's Huntsville, Birmingham, Chattanooga, or any other market we go to in the future. That is the way we operate and do business, that we provide a quality product to our investors.
Now, for an investor, I think it's quite easy to get excited about a, say, new market like Chattanooga with a completely rehabbed property that's already tenanted by the time they close, which, as you stated, is important to you. And then the third part of that piece is the management. Management long-term for that investor is really the glue that makes this entire thing stick together. And that investor, they need to sign a separate management agreement before they close on that property, which is the contract between the investor and the property manager. Tell us more about your property management contracts there, Lindsay.
Recently, just another big announcement is that our property management company was Alabama Rental Property. So since our venture into Chattanooga, we've had to change our property management company. So now we are Atlas Rental Property. You're evaluating who's going to be living in the property and responsible for your overall cash flow. So I think that the property management piece is the most important aspect of real estate investing just in general. It can be the renovations are very important, the market, the property, et cetera. But I think at the end of the day, who you leave your investment with is really going to determine your overall success. And some things that I think we need to be cognizant of when you are signing a property management agreement would be, hey, look for the fees. Read over the property management agreement and find out what you are responsible for. What is the property management company responsible for? And make sure that you've got a very clear definition of what all you're going to be responsible for doing and paying for. If you are buying a rental property and you're having a property management company take over it for you, interview them. And I know Maureen has preached on this. We are fully on board with turnkey real estate being a driver of overall success for investor clients. So if it's not with us, do it with someone. But if you are doing that, make sure you're interviewing the property management company. What's your occupancy? What's your maintenance ratio? What is your overall rent collected? What's your AR number, percentage? If they don't know those things, that means they're not tracking those things. Those key performance indicators are huge in determining your success.
Those are some excellent due diligence questions. When it comes to that property management agreement, again, which is the agreement between that investor and the manager, what are some red flags to look for? And then what should someone expect to see inside a property management agreement?
I would personally point out red flags that state in the event legal counsel. I've seen that several times, and where property management agreements will state, hey, in the event that your property or your tenant defaults, you must seek advice of counsel. And that essentially means that if your tenant doesn't pay, you're responsible for reaching out to an eviction attorney. And the steps that include that are very, very tedious, and they change from state to state. Every state can dictate their own eviction laws. So making sure that you know all of the eviction laws and processes from each state that's just beyond tedious and not for any investor to need to worry about. It's things like that. And if the property management agreement ever defers you to another, quote, expert, I would say is something that, hey, that's a red flag. And that means you are going to be responsible for doing that. A lot of the things that you need to look for in your standard property management agreements is, hey, what all the property management company is doing. They're going to collect the rent, be responsible for dispatching, managing maintenance calls, handling collection, posting, drafting rent payments. All of those are pretty standard. Some will charge the property management fee if the property is not rented. That's a really big distinction in that a lot of companies will still charge you the property management fee even if the property is not cash flowing. So you'll essentially go in the hole as the property sits vacant. A lot of companies will do, renewal fees, and then they'll charge for inspections. A lot of those things you do want to be responsible for and pay for. You want your property management company to go do random home inspections. You want to know the condition of your property from time to time and make sure that you don't have a leaky faucets that's causing a huge mold problem. And then some of them can be kind of frivolous. So you just want to make sure that you do your due diligence and read through that thoroughly.
Yes, we're talking with professionals here that operate at scale. They're experienced turnkey providers. And when it comes to any potential friction with the tenant, you are operating in some of the most landlord-friendly states in the United States. And really the short story on what makes a market landlord-friendly, I think the top thing that comes to people's mind is that you can get a relatively quick eviction for a non-paying tenant in Alabama and in Tennessee. If you are interested in turnkey property yourself, now, as we stated, they operate in 3 markets since Chattanooga has been added. So opt in, get the report, and learn and do some of your due diligence in your own time on the market at getricheducation.com/Birmingham or /Huntsville, or now getricheducation.com/Chattanooga. I know that name's a little bit hard to spell for you. If you put /chat, that will go to the same page so that you can get some property in investor advantage markets. Lindsay Marine, it's been great learning about Alabama and the new market that you're in, Chattanooga. Thanks so much for coming onto the show.
Thanks, Keith. More to come.
Thank you, Keith.
Yeah, good fundamental material for sound investment there. We covered the U-Haul migration stats. United Van Lines let us know that for inbound migration, Tennessee ranked number 7 and Alabama ranked number 8 in the nation. Operating in Birmingham and Huntsville, Alabama, and now the newly minted GRE city of Chattanooga, Tennessee.
A really solid Tennessee excursion. Pardon me, boy, is that the Chattanooga choo-choo? Yes, yes.
That is the Glenn Miller Band with the Chattanooga Choo Choo. That's from the big band and swing tune era of the 1940s. Chattanooga's official nickname is the Scenic City for the views of the surrounding Appalachian Mountains and ridges. They've really got a growing mix of both services and manufacturing industry there in Chattanooga. Now, if you're new to turnkey real estate investing, you probably appreciate the fact that the property is heavily renovated and it's occupied with a tenant on day one. But understand that you can choose any property manager that you want, or even manage the property remotely yourself, which is something that's not for me, but I do know some investors that do that successfully. But yeah, most investors choose to use that property manager in-house with that same property provider, just like you can here. And the management with this provider, they do not charge you a maintenance markup. Some property managers do that. For example, if you had a $200 plumbing bill, the manager might tack 10% onto that and charge you a bill of $220, but they do not have that here. There's also no turnover fee between tenants. Say if you had to pay $2,000 for a turnover, there's no manager markup there. In Chattanooga, the single-family rental homes are 3-bed, 2-bath, and the rent range is $1,300 to $1,500. The prices are $160 to $210K. And then on the duplexes, on each side, they're 2-bed, 1-bath. You get $1,100 of rent income on each side. So that's $2,200 of rent income from a duplex. And their purchase prices are $240K. That's a super attractive 0.9% rent-to-value ratio on the Chattanooga duplexes. And you get the low mortgage interest rate and the low property tax there as well. Thanks to our great guests today. Again, Robert Kiyosaki and I together here next week. Some very actionable opportunity for you today to get the market and property report that the provider put together just for you. Visit GetRichEducation.com/Birmingham or /Huntsville or the new GetRichEducation.com/Chattanooga. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.